The current government have been doing their bit to ensure that the investment climate remains stable, remain, friendly. But talking about what they need to do going forward is the bottom of our next discussion, where we'll be focusing on Nigerian investment climate. What are the challenges? What are the issues? And joining me right now to give credence to the discussion is Mr. Tunde Ogunje, who will be helping us to understand what are the issues around Nigerian investment climate and what will need to be done to bring this perspective to a very interesting and instructive level. He'll be joining me once we have him via our battle experience on the show. But all right, so let me join Mr. Tunde Ogunje. A very good day to you, Mr. Tunde Ogunje.
Thank you very much, Nico.
All right, sir. So let's get down to the bulk of our discussion right now. One of the leading story in Nigerian economy today was that President Bola Ahmed Tinubu went to Brazil and he spent about 3 days in Brazil. He was in Japan. He also spent about 3 days in Japan. But the Brazil outing is the foremost issues that become one of the issues that major talking point in Nigeria. And what is that talking point? Petrobras is coming back as planned. But what is your take on Petrobras, the 5-year MOU signed by President Bola Ahmed Tinubu in aviation, oil and gas, and agriculture? So let's have your take on this development.
Well, thank you very much, Nico. Thank you for having me.
All right.
Well, I'd like to say, first and foremost, that we have to be grateful that we as the nation, we have things that can make other countries to want to do business with us. So, and of course, the more business partners we have as a nation, the better for us, because that means we can diversify the sources of trade and investment that we expect to have in the country. Why do we have to do that? Because we cannot afford to limit our options. We need to be sure that we extend all of those trade opportunities to other countries and just ensure that trades can flow in, because investment is what can improve the capacity of the economy. So it was great to have the president going to Brazil and all of these places to be able to sign some of these MOUs. The only thing I hope we're going to be cautious about is to make sure that we sign all of these deals and be having the Nigerian people in mind while signing all of those. Let's make sure that we get all of the benefits accruable from all of the trade relationships.
Very interesting. But let me take you on one of the MOUs that was signed. It focused on aviation. We have had issue with our aviation sector that we don't have a direct flight from Nigeria to Sao Paulo in Brazil. But here we are. One of the leading airports have been rewarded through this signing of MOU. We're not going to be having a direct flight from Nigeria to Sao Paulo. But what's your take on that? Because you talk about affecting Nigerians and having Nigerians in mind. And that's why I have to bring out this point in the discussion right now.
Well, generally, business is population driven. So it's great that MOU has been signed and we have EPS being able to go directly to Sao Paulo. Hopefully, we'll have enough of traffic, along that route that will be able to justify the investment that EPS will be making in that particular line. So it's great to have those MOUs in place, but of course we also need to create activities to stimulate and catalyze economic activities around that same corridor to make sure that any investment that any private or public company is going to make into that is going to yield the needed fruits, so that it's not going to be a question of, okay, we have started, but we do not have the revenue to be able to continue to service that operation, and therefore we need to close it down. So government will have to create some kind of not incentivizing it now, but rather to create activities that can catalyze those kind of economic development activities.
Exactly. And talking about catalyzing investment activities, Brazil is also known for livestock development, agricultural area, and one of the other MOU is on agriculture, particularly livestock. And Brazil is popular with livestock, cow, and the rest of them. But what's your take in this regard? Because for the government, it's an opportunity of over $2 billion US coming all the way with that kind of MOU that was signed in the agricultural sector. But what's your take? Because I don't want us to look at just the money alone. But as rightly pointed out, sustaining such MOU is very key. But what's your take on that?
Yeah, look, I think that there are things we need to do back home, in Nigeria, to make these things very interesting as well, because we also have the Nigerian people who are capable of doing some levels of farming, even if it is just for us to have what we're going to eat. Now, a lot of people have not been able to do what they're supposed to do because of the attendant problems that we have. People can't go to their farms. It's difficult to be able to do things the way you normally freely do them. So right now, while we're signing this MOU and making sure that people come in to be able to do what they should do to boost trade and investment in Nigeria, we have to do a lot also to make sure that those activities, those criminal activities that have been deterring people from going to their farms, that those things reduce or don't even happen again. So yeah, it's great that we're signing those agreements in agriculture, in aviation, and all of those sectors. But we have to be mindful that some fundamentals are also put in place to ensure that we don't lose what we are gaining eventually.
Exactly. Now, talking about the fundamentals, this now take us to the core of our discussion today. Nigerian investment climate. A lot have been said. Even in my intro, I pointed out how the government is targeting about 3.9% economic growth. Though poverty rate is still there, inflation rate is there, even though the government have been able to work on a rebased level to about 22.44%. Food inflation is there. All these are staring us in the face. But from your own perspective and your understanding of Nigerian investment climate, what has been your assessment so far?
Thank you. That's complex actually. But for always, whether you're talking to a Nigerian who for whatever reason does not believe in Nigeria, or you're talking to people from outside Nigeria that do not even know what's going on, but they just want to give their take on what is going on, I think everybody is going to agree that we have the potentials. And at this point, the outlook for the investment climate in Nigeria looks great, But of course, we also have to include it in that there are still a lot of risk as well, because if you're going to get investors to come into Nigeria to do business, investment generally, there's a risk return element. They always move together, expected return for that matter. So if somebody is coming in to do business in Nigeria and he's expecting that he's going to be able to make X percentage of income, of return, then he's going to be asking what's the level of risk that he has to accommodate to be able to earn that return. So while the outlook is good, the risk is the possibility that revenue, as it is projected, is not going to be realized, based on unexpected occurrences. So we have to know that the outlook is great, but the risk are still there. Maybe along the line in this discussion, we'll talk about some of those things.
I think that would be the point of my next point of question to you, because when you talk about the risks, we are probably talking about the challenges within the investment climate of Nigeria. But from your own understanding, I recall that some few weeks back, I won't say months, some few weeks back, you were in Nigeria, you participated in some high-level discussion around the economy and the rest of them. But there are things that you saw, there are challenges, even that you can share with us going forward. Let's have that.
Well, some of these things are really out there that we can see. Some of those issues are macro. They're fiscal actually. We talked about inflation. Inflation is moving at a rate that is almost over 20% now. There is still the debt burden that Nigeria is carrying, as in we pay a substantial part of our revenue as for debt servicing.
Exactly.
We have sometimes also we see issues like our debt, like our budget. The estimate for the budget sometimes they're not realistic, that kind of thing. So we have a very weak revenue base because of the dependence on oil. Now these are the things that people will look at from both within and from outside Nigeria, and they look at it and say, man, it looks like something better has to be done, or things have to be done in a better way. So that's for macro and fiscal issues. Then there's the currency and the foreign exchange. Naira gained a bit over the other hard currencies, but there's still instability, a little bit of instability in that regard. Thank God that we've been able to reduce the risk in that space by the level of production from Dangote refinery. So that's great for us. But forex is still scarce. People want to do business, and they don't have the dollar to be able to get all of the raw materials that they want to get. The government is doing a lot to just make sure that people don't waste the fuel that we have around. Now, there's also the issue of multinational companies maybe divesting and moving away, obviously, because some of the things that they need to be able to do business successfully, those things are not there. There's also the regulatory risk. I mean, policy can be so unpredictable in Nigeria. Something can come up today and there's a change in policy. The public-private partnership framework is still very weak, needs to be strengthened so that private investors are coming into the public space to be able to develop infrastructure and all of those things. Then again, there are institutional overlaps. A lot of institutions doing about the same thing, and sometimes you don't even know where you need to go to be able to get some of these things done. Then there's, of course, infrastructure issue, whereby where if you are moving things from your farm to the market, for example, will they get to that place as you took them in the same quality and the condition that you started from? So there's infrastructure, there's power shortage, there's poor transportation, there's inadequate tech infrastructure as well. Then, of course, we cannot run away from security and political risk as well. Insecurity is still there. The national security guys are doing a lot. We've been having less of the things that we used to commonly hear and see. Now we have them reduced, but those things are still there. It's just that in lower scale than we used to have before. Then there are a lot of focusing on a lot of focus on politics. People are already looking at 2027. It kind of creates an atmosphere where people want to do business, but they have to limit their outlook to 2027 because they don't know what's going to happen in 2027. No matter how sure politicians might want to make it look like they know the outcome of 2027. People that want to do business, they're not going to base their own outlook, their calculation, their projections on the things that I just said openly by politicians. So we have those security risks, political risks, and there are also some specific sectors where we have some risks, like oil volatility, things going up and down. You don't even know what's going to happen tomorrow, whether oil production is going to go up or down. or something like that. So when you have all those kind of uncertainties, it increases the risk in the economy.
Exactly. Very interesting. I really love the way you itemize and also put analysis to each of the points you have raised. But there's one particular one that you said that have become something that many Nigerians, particularly the government, is celebrating in recent time. We now add over $41 billion as in our foreign reserve kit. That means we have over $41 billion in our external foreign reserve. Many people are celebrating it, but some people are saying this is not good enough and we should increase it more. Although for the CBN, their target is about $60 billion, and analysts are projecting that we may hit $45 billion before December. But what's your take about this $41 billion we are able to recover? Because this will also help us to buffer our balance of payments, encourage businesses, export business and import business into Nigeria. But what's your take on that?
Thank you. There are two things actually, and I don't think we should look at one side and not look at the other.
Exactly.
For us to continue to build our external reserve, that's great. It creates some kind of confidence, among investors. People believe that once you have that that balance increasing, you improve FDI, your credit rating gets better, you have access to cheaper loans, which is great. So it brings a little bit of confidence it gives a little bit of confidence to investors. Then it also creates this exchange rate stability. Kind of Naira becomes less volatile because it can be defended. There's better planning for businesses also. Then it acts as like a protection against oil price volatility as well. So if oil price crashes and global crisis, we can use that like a shock absorber. Then also serve as like import cover for us, to secure essential imports and to be able to sustain supply as well. So those are some of the. But on the other hand, we need to be looking at something like opportunity cost. So the funds that we are tying up in those kind of low yield assets, instead of local development, what's the cost for us? What could we have used that fund that we're building in reserve? What could we have used that to do locally that probably could have fetched us higher return? You know what I mean? Either in terms of directly or by the indirect effect that we could get from those kind of investment.
Exactly.
Then there's also sterilization costs that CBN spends. They need to mop up liquidity. They're kind of straining finances. Sometimes it's from some of these things that local investors and business people have tapped into, but those things are not available once you have put them into those kind of investment to be able to boost international recognition. Then there's also the issue of how we're managing this thing. There's no clarity. People get worried a lot about the opacity in that space. How are we managing? Are we overstating this reserve? Are we misusing or undermining this reserve? What's the credibility? Even with wherever this fund is, what is happening? So then there's too much of oil dependence. So because we depend so much on oil, the reserve growth that we're talking about is still tied to oil volatility. So those things have benefits. To build reserves, it has benefits, but those things also have some costs.
Exactly. And you're talking about the pause, but we also need to look at the positive side of it. I would also quickly take you to Nigerian stock market. I know you have been following that particular sector very well, being that when you are here back home, those are the areas that you normally cover in your regards, particularly the Nigerian stock market and the rest of them. But now, taking a view of what has really happening from January to now, we have seen that the market has been a little bit on the sentiment level, although people say it is a mixed sentiment, that we should still expect more sentiment coming out from the market. But in the momentum we are seeing right now is that in August we saw a mixed market, but in September we're also seeing a grip of a mixed market. But in the last 2 days, we have seen a bearish one coming out from the Nigerian stock market. But going forward, looking at what has really happened from January to August, what has been your take so that we can create that atmosphere to encourage suppose investors into Nigeria?
Well, the stock market, you know, is a reflection of a lot of things. So you have investment securities. You have securities that people are buying and selling. So basically, it answers the call. That's the stock market answers the call of demand and supply. So once you have people that want to buy, you know, being more than people that want to sell, you know, then prices will definitely go up. Now the thing will be, why do we think that people have money to spend to be able to buy stock in the market? Where are we getting the fund from? Of course, we can say there's been a lot of issues. There have been a lot of like reforms that the government has done that will make funds to come into the hand of people. Of course, fund is also going out from the hand of a lot of other people. It's just a question of who is getting this fund. You know, who are the people that will have access to this. Of course, the big guys will have access to those level of funding that can remain in the market for a while. So yeah, it's great that we're having this good run in the market. The index has been rising and attaining like an all-time high in recent times. That's significant. It gives us a lot of credibility also, especially when you're comparing our market with other markets in emerging economies around the world. Now, it's also important to say the market is still a bit attractive to investors, foreign investors especially, because by the time you dollarize our market, you know, vis-a-vis what's happening in other markets like in South Africa and other places, you find out that some of those stocks are still like cheaper, you know, in dollar terms somehow. So it makes our market to still be a destination for funding that is available both locally and externally.
Exactly. Now let's go to capital aspect of the Nigerian business environment, which you are quite very interested in that area, talking about how to raise capital, how to get money to be invested. You know, take us through on some of the issues around raising capital in Nigerian investment climate.
So it's so the way they say in business and finance and investment is that capital is mobile. So it means capital goes to wherever it can be best used. You know what I mean?
Exactly.
But one of the things that can inhibit the flow of capital into an economy is regulation. So when people investors now, potential investors, when they're not sure of what will happen, you know, people get worried and they hold back a little bit and they go to climate where their investment can be better protected. So I think government needs to do a lot about improving regulation, making sure that nobody can misbehave and just get away with it. We've had issues in the capital market where we had a lot of fall, a lot of shenanigans going on. So when investors say that they can come in, they can do business, they are not going to be inhibited by political or any other kind of considerations like that, where they know that if they approach the courts, for example, the judiciary will get their investment and themselves protected, you know, all those kind of things, influence what people will want to do with their funding, whether they want to bring it to this climate or they want to go elsewhere. So these are things that can motivate infrastructure development, investment. Government also need to kind of make private sector involvement in infrastructure building, infrastructure development has to make it more attractive by setting up the framework and making sure that everybody is going to play by the rules.
Exactly. Now, talking about playing by the rule, it boils down to local investors, young entrepreneurs who are also coming up, looking out for where to get capital in the Nigerian investment climate. Because we can't be talking about investment climate and isolate our young ones who are also interested in doing business locally in Nigeria. Recently, you came to Nigeria and you talk about beyond capital. What are you trying to point out to our young entrepreneurship that what they need to know beyond just capital? Can we have your thought on that regard?
Yeah, and you're probably seeing the book right behind me. So,
but you haven't given me the copy yet to read, though.
Yeah, yeah, I'll get you a copy when I get to Nigeria.
All right.
So yeah, the thing is this, Lekon, I've the few opportunity I've had to talk with the business people, you know, and to in my consulting or in the days that I worked as accountant or CFO and stuff like that. I tell people that liquidity is different from profitability, you know, and it amazes me how many people cannot spot the difference between those two things. So people borrow money, they use it for personal things. People maybe even not borrowing. People get money from investors, you know. They're supposed to be business capital, you know, and they spend it on things that are unrelated to the business. A lot of people see they have this quantum of fund in their bank account and they start to spend it. Meanwhile, you cannot even spend money from sales. You should spend money from profit. If that's even if you are making that profit in the first place. So the point of the book is, look, liquidity is good. Access to capital is essential because you cannot even do business without capital. But when you have the capital, what do you do with the money? What are those other things that you need to pay attention? Do you just rely on your knowledge alone? Do you have a board of advisors, you know, that you have people that are advising you? What are you doing about sales? What are you doing to make sure that your operation management is strong, that you can get a good product out there? When you get a good product out there, how are you marketing to make sure that you get enough sales before you're even talking about financial management? Are you doing strategic planning? What's your goal? What's your vision? What do you want to do in the next 5 to 10 years? You know, so these are some of the issues. How do you relate with your personnel? Do you just hire somebody because it's your brother, even if the person doesn't have the knowledge to be able to do what is expected of him or her, or is it because he's the son of a friend? You know, all those kind of things put together are what we put in that book, and these are things that entrepreneurs really have to be mindful of in when they're doing business. So it's just beyond capital. Beyond capital is saying capital is still essential, but when you get the capital, what do you do with it?
Exactly. And talking about what you have just said, because in my little experience with small business owners, we have seen that happen. Even when government is giving out the what they call the handout to businesses, Bank of Industry, Development Bank of Nigeria, we have the issue like that. Recently, CBN gave out money to people to go and do business, to go and farm. 1.7 trillion naira was given out. You know that up to now, CBN is unable to recover over 400 billion from that money as a result of that. But before I let you go, Tunde Ogunje, I need to quickly ask you this question also. CBN MPC members are meeting on September 19th and 20th. You guys, like my humble self, economist, financial analyst, all of us are throwing out projection here and there. But I want to hear from you. What is your projection for the interest rate that is coming up, MPC meeting that is coming up? Should they retain the interest rate, or should they reduce, or should they go higher? I want to hear from you. I'm talking about, let's have your thoughts on this MPC meeting coming up in September 19th and 20th?
Okay, yeah, thanks, Leko. And this is interesting as well. Interesting question. So the CBN is managing a lot of things together at the same time, you know. So, and those are the things that will guide what guide the decision that they come to when they have the MPC meeting. I mean, we can kind of suggest what it should be, what it shouldn't be, whether there should be increase or decrease, and nobody is going to be right or wrong, you know. But if we leave that to the CBN, it helps them because they have an overview of the economy. I would say maybe more than anybody else because they have all of those information getting at them. But there's a few things we need to be mindful of. The higher the rate, the controlling rate, the higher it is, the costlier it becomes for private sector to be able to access funding, you know. So, and of course, that's what public and just finance people generally will call the crowding out effect. So, government will have to be mindful of that if the rate is high, it becomes like, of course, it's always going to be a benchmark, but it becomes more difficult for private businesses to be able to access funding because you now need to access the fund at a higher rate. I mean, if government is doing business with me at 20%, and another business there, maybe Dangote or any other business wants to bring out like a CP, a commercial paper, at 15%. I mean, government rate is higher and is almost risk-free. We call it risk-free rate in the market. Now, I won't not go and put investments in a potential 15% return that is even riskier. So if that means if a company like Dangote Cement or any of these companies will want to borrow money, for example, it has to be at a rate that is higher than government rate. Now, those are the kind of things that we need, the CBN will have to be mindful of in deciding what rate they are putting out there, that the controlling rate. And of course, again, we know that the higher the rate, the more we try to curtail inflation because people are discouraged from borrowing and spending when rate is higher.
Exactly.
So it's a whole lot of things, and the MPC, the committee will be comprising a lot of people with diverse experience in some of these subcomponents of a macroeconomics.
Exactly.
So yeah, they should do what they're doing. What I'll be hoping will not happen will be when decisions are motivated by politics and not fundamentals, like real economic information. I hope that's not going to be the case. I hope it's not going to be the case of powerful people wanting a particular kind of band of rate and ensuring that the CBN plays according to their own rule. That's where we'll have a lot of challenges.
Exactly. Thank you so much for your thought and interesting and laudable submission coming from you, Mr. Tunde Ogunje, CEO of EPS Management Consulting based in Canada. Thank you so much. We really appreciate you coming on the show too. So
thank you.
Enjoy the rest of your day over there in Canada. I know this early morning in Canada, but just enjoy your day over there, sir.
Yeah, thank you.
All right, sir. So I've been speaking with Mr. Tunde Ogunje, who happened to be the CEO of EPS Management Consulting. He's one of our colleague, veteran journalists here in Nigeria, but he has moved abroad to do other things for himself, financial and economics expert per se. Now, here we come to the end of the show today, having discussed issues around Nigerian investment climate, giving us a report on Nigerian stock market, energy, commodity, and precious material across the world. My name is Adefola Olamide. Till we come your way again, do stay tuned to ADBN. The next show is coming on Softline as well as Global Digest with Marcus. We'll see you again. Stay around. God bless you. Bye.